Hi there, this is Rob, and this is the 2-minute overnight overview for Thursday. I'll be showing a study that exemplifies why profit curves are so important to examine, but first let's take a look at yesterday's odds and last night's action. Here's a look at the odds sheet as it stood on Wednesday afternoon. As you can quickly see, we had a few of the index securities meeting the minimum criteria for a possible long trade, but neither ES nor SPY had odds that were quite strong enough. Looking at ES, we can see that price action was solidly bullish, but both internals and seasonality came in about break even. This kept the average profit factor below the minimum level of 1.3. You'll note that the weighted average also came in lower than necessary for ES. And when I looked at the edge finder, there was nothing appearing to suggest a strong edge either way. So the odd sheet was borderline at best. We had no support from the edge finder studies, and seasonality was weak, so I'd be looking at a smaller target amount rather than a larger one. All this combined made the choice to pass and not trade an easy one. Let's take a look and see how the night played out. After settling at 1433 on Wednesday, ES spent most of the night below that level. It fought back after Europe opened and peaked into positive territory a couple times, but in the end it opened with a small gap down of 0.75 points. So an ES trader likely would not have made or lost much either way. Now let's look at the daily chart and I'll share a little study. After making a 20-day high 2 days ago, ES closed down yesterday. And this morning I looked at all other times ES closed down 2 days in a row following a 20-day high. I also required a close above the 200-day moving average. Here are the results. 61% of the instances gapped up the next day, and with winners and losers about the same size, this made the profit factor of 1.6. Not overwhelming, but certainly somewhat intriguing. But now let's look at the profit curve. What we see here is that what once appeared to be a consistent edge has failed to act in a consistent manner for an extended period of time. We can also view this chart based on time rather than instance. It appears late 2005 was when the setup last appeared to be effective. This is a great example of why I always look at profit curves and not just numbers. Thanks for listening. Rest easy.